Alright guys, so we still need to talk about the US-China trade war, and just because Scott Bessent is heading to Switzerland doesn't mean an agreement will be worked out. Now in our previous video, we mentioned how the first trade war took 20 months to iron out an agreement, and let's not forget that in 2018, the US was in a far stronger position than they are in today, and the tables have turned. The US economy is contracting, the consumer is downtrodden, and US companies are less efficient than ever before. Here's the direct impact of the new US policies. American productivity has gone negative for the first time since 2022. In other words, US companies have to pay employees 5.7% more to produce the same unit of output. Efficiency has dropped and labor costs have escalated. And this adds yet another straw on a camel's back when other input costs are rising thanks to the tariffs. And there's no way for prices to come down. The American consumer is going to get squeezed even further. Now, where's Lutnick with all his robots? And we have to think about the US-China trade war as a race to see who collapses first. Will it be the consumer that takes down the US economy? Or will it be China's factories that go bust, they go out of business first? It's simply a battle of economic attrition. But even Scott Bessent is willing to sacrifice the US consumer to win the trade war against China. It's back to the Barbie doll argument again.
Girl having two dolls. And he said, well, what president didn't take the question, but he said, what would you tell that girl? And I said, I would tell that young girl that you will have a better life than your parents, that you and your family, thanks to President Trump, can now be confident again that you will have a better life than your parents, which working class Americans had abandoned that idea. Your family will own a home. You will be able to advance. You will have a good education. You will have economic freedom.
But China is not playing around. They are in it to win the trade war. Their biggest leverage is time, and the US has multiple crises flying towards its economy. And across the board, we are seeing American brands get clobbered and they are taking brutal financial hits. And this is just one horrific chain of events where companies earn less, they hire less, and they start laying off more people. Corporate America is getting hit. Nvidia and GM will take a $5 billion hit. Ford, Black & Decker, P&G, and AMD will book over $1 billion in either import tariffs or revenue crash. This destabilizes not just the labor market, stock prices are now under pressure as well. And once again, everything revolves around the weakening US consumer. China today has begun to stimulate their economy. Their banking reserve ratios are down, so their banks can start giving more loans to the people out there. But the US is handicapped here. They can't use the financial markets as leverage today. And that's why China has drawn the red line ahead of the talks. Beijing has demanded the US to cancel all unilateral tariffs on China. It's the same consistent demand in order for them to take the talks seriously. And if not, the trade war will just rage on and there simply will be no quarter given. Well, Trump just gave us the answer and it's not good.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
Mr. President,
The problem with such an inflexible move is how it just boxes you into a corner. How are you going to reshore industries, bring down inflation, and restore consumer confidence without a Chinese deal? If it's going to take another 20 months to sign one, what does this mean for the consumer price around the country? It doesn't take a genius to figure out that the inflation crisis has not been solved yet. According to Goldman, core PCE inflation in the US is about to rise even higher over the next 12 months. We are in May today where core inflation is just 2.6%. However, it's going to spike higher and reach an incredible 3.8% by the end of December. And this could drag all the way until May or June next year, 2026. This is going to hammer US consumption even more. People will simply stop spending, and it doesn't matter if the product is local or foreign, budgets will still shrink in either case. It's important to focus on inflation for the moment because it's also tied to the collapsing dollar. Before the reciprocal tariffs, Bessent said how a stronger US currency will buffer the effect of higher prices. Now that's true if the dollar went higher, but it went lower. He didn't expect the world to start dumping US assets in response to the trade war. Because the dollar is the reserve currency, there's no need for it if global trade comes down. Import costs just from a weaker currency has gone up by 8%, and this report from Goldman says it all. A weaker dollar amplifies the effect of the tariffs. Besson was wrong about a stronger dollar, and the next part is even more important. Because of the China embargo, imports will be rerouted, but that doesn't mean costs will come down. Import demand will be shifted away from Chinese exporters towards countries with higher production costs. This is not the definition of winning. That's why China can afford to wait the US out. They are brewing a nice cup of jasmine tea under the pine tree. Time is on the Chinese side, and it isn't with the US this time. Even the Federal Reserve is freaking out about inflation. There's simply no certainty on anything today. In the recent Fed meeting, Powell he kept rates steady, zero cuts at all. He might be the only man left who at least understands, the daily effects of the tariffs.
What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs.
So why is Trump so insistent not to lower the Chinese tariffs? Well, you could say he simply doesn't understand that's a definite possibility we can't discount. But another reason might be his plan to sign 90 deals in 90 days to work out an arrangement with the world first before getting serious with China. It's back to the Chinese containment game plan. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. But I highly doubt it will work. It sounds great on paper, but the problem with this White House is the execution. And just like the reciprocal tariffs, the trade negotiations with the world are also extremely bizarre. Now, Trump has announced America's first trade deal with the UK. He calls it historic, but you'll quickly realize that the deal is more or less a joke. But let's give Trump his victory lap first. He believes the deal will help the US raise $6 billion in external revenue from the 10% tariffs. US farmers will also enjoy $5 billion in new export opportunities. But hold on for a moment. Tariffs are paid by the consumer and not really the exporter. So $6 billion raised will be coming from the American people themselves. It's just consumer dollars flowing into the government coffers. How can this be framed as a win? And it gets even crazier when you listen to how Lutnick claims victory over this trade deal. And at this point, I give up.
So we feel really good about the deal. You've heard the Prime Minister, he feels really good about the deal, right? And we started at 10% and we ended at 10%. And the market for America is better. And this is a perfect example of why Donald Trump produced Liberation Day. People don't understand he gets things done in a matter of time. This would have taken Jameson and I 3 years, maybe. And instead, we got it done in 45 days certainly because we work for Donald Trump.
Now, I don't know about you, but I don't feel good about this. There's no feel good element because the baseline tariffs have not changed at all from April 2nd. US consumers will still be paying more for British goods. Now, getting more export access is great, but it's not guaranteed that the Brits will buy US products and produce. Even after lowering the British tariffs, American goods might still be too expensive to import in. So this whole situation is one big nothing burger. The optics are great, stocks rallied quite a bit, but this spike probably won't last. But let's shift gears a bit and talk about the financial decoupling. It's also a very good opportunity to touch on the big gold rally over the past 6 months. Now, as we mentioned earlier, the dollar is facing headwinds and the threat of higher inflation is getting very real. As a result, alternative assets have risen and a big part is thanks to China. Consider what Beijing is facing. The effective tariff rate on Chinese exporters is well over 100%. That's after we factor in their exemptions on iPhones, chips, and other electronics. So now Chinese exporters will be holding fewer dollars because they will be earning less currency from the US. Meanwhile, China will be trading more with the world. And if you are the Chinese, you want to settle trade in your own currency, something that you can control and even print in a worst case scenario. The last thing you want to hold are dollars. The fear of sanctions is real, but just in trade alone, it doesn't make sense to hold a ton of reserves anymore. The majority of China's cross-border trade with the world has been de-dollarized. Only 41% is in the reserve currency, while over 54% is done in the Chinese RMB. The rest is done in other currencies like the ruble or the euro. And just on the basis of bilateral trade, there isn't any need for China to hold huge dollar reserves, which obviously means the buying of treasury bonds will gradually calm down over time. Now, where else can China put their money to work? Not every project in the Belt and Road is a good project, and buying euro bonds might be a good idea, but how much can you buy? And it depends if trade between them actually rises. No point holding on to euro bonds and exposing yourself to yet another liability. After all, you don't hold the debt physically. It's probably custodied in the Euroclear system somewhere in Belgium. So the default avenue is to buy gold with zero counterparty risk. Now, China keeps adding more gold to the reserves. Despite record gold prices, Beijing keeps buying. In April last month, they bought an additional 70,000 ounces, and if we combine the entire 6-month streak of buying, the Chinese have accumulated an additional 30 tons of gold. If the US dollar continues to weaken, this will only encourage China to shift more volumes to gold bullion. And it's not just the PBOC or the big boys buying. The man on the street is also buying. Retail investors, they're also getting into the thick of the action. A lot of retail money is flowing into Chinese gold ETFs, and it makes sense. The Chinese property market is still weak. No one knows how long it will take to recover. Meanwhile, there's also the risk of China devaluing their currency. The RMB might drop even further if trade talks break down. So the average Chinese investor is very much into gold. Now, what Trump has done is reduce the desire for US assets. Gold has had a fantastic run, and the short term, it really depends on how the trade war plays out. Now, if the US manages to sign a trade deal with China, then sure, prices will stabilize. But will Trump cut the tariffs on Beijing first? That's the big question. Because time is running out for the US economy. We now have reports that the US is planning to comply. There are rumors that Biden has a plan to lower the tariffs to as low as 50%, down from 145%, and this could come as soon as next week. Now, for sure, this is good news. But once again, we have mixed messages coming from the White House. Trump is negotiating with himself. China isn't even doing anything, and the tariffs seem to be already coming down. But maybe we are all wrong. Maybe during the talks, China will fold and drop their own tariffs first, because Lutnick just revealed to us who is the best deal maker in the world.
By the way, I want to make this clear. While Jameson and I worked hard, this was the president's deal. And people think, oh, that's not the way it works. If you got to sit next to him, I have the best deal maker to my left. And if you don't think that we take advantage of him calling the prime minister and getting that deal done, You don't understand who's the President of the United States. So he's the closer. He gets deals done that we could never get done because he understands business, he understands deals, and that's why we're here today. So,
but let me know what you think. Who will drop the tariffs first, the US or China? And will a trade war reprieve be good or bad for gold? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.